All right, ladies and gentlemen, MrSotko here. Welcome back to the channel. Got a whole bunch of good crypto news stuff for you, and some of it is pretty sousy indeed. Also, I'll probably be live on Twitch today, which is in the description below. Just click on that, give me a follow, and you'll get the notification when I go live. But moving on from that, crypto CEO threatens customers after mistakenly sending them millions. Uh-oh. It happens. Imagine waking up one morning and finding an unexpected 20 million in your bank account. It would be pretty sweet for a moment until you realize that money isn't legally yours, and soon the bank will correct the mistake. But what if the bank couldn't do that? Well, the hypothetical scenario became real for a few lucky users of the decentralized finance staking protocol Compound, which acts like a bank without all the traditional banking rules. If a tweet says, if you received a large incorrect amount of comp from the Compound protocol error, please return it to the Compound time lock. Otherwise, it's being reported as income to the IRS, and most of you are doxxed. Now, Compound's founder is begging those users to return around $90 million, or around 280,000 comp that mistakenly went out. And he's taking the ask a step further by threatening users who don't return the money. Compound and other DeFi protocols basically work as blockchain-based banks, allowing users to borrow money and take out loans. The platform, in turn, rewards lenders with its native Compound token. On Wednesday, the service released an upgrade, and that's when things went downhill. Whoops. A few hours ago, Proposal 62 went into effect, updating the comptroller contract, which distributes comp to users of the protocol. The new comptroller contract contains a bug, causing some users to receive far too much comp. Yeah, you could probably say that. The new comptroller contract contains a bug, causing some users to receive far too much comp. That far too much comp that was overpaid to Compound users amounts to roughly $90 million. And remember, the earlier scenario about waking up to 20 million in your bank account, that appears to be what happened to at least one Compound user who tweeted a screenshot of more than 70 million comp sitting in their account. Says, what's going on here? 70 million comp? And you can see he's got 70 million comp in his account there. And Compound is at $297. So you could say that he received quite a bit, around $29 million. One Bitcoin developer explained to CNBC that due to the way blockchain works, there's really no way for Compound to get its money back. So Leshner tweeted out a deal to users who received the comp tokens: return the money voluntarily, and you can keep 10%, which is kind of a good deal. However, if those users do not give up their newfound riches, Leshner says that Compound will report the income to the IRS to be taxed. Furthermore, he warned that users would be doxxed, meaning their personal information would be public. The threats are bizarre. For one thing, regardless of whether the Compound users decide to keep all the comp tokens or just 10%, they still have to report their earnings and pay taxes on them. Whether Leshner meant to imply this or not, it appears that if he's saying that the IRS doesn't need to know about the 10% a user keeps if they return the rest. So, which is true. He's saying, hey, return it, or I'm going to report you to the IRS. First of all, he doesn't have the information, because as for the doxing claim, it appears to be an empty threat. Compound does not collect user information. So if you return it all, he's not going to report you to the IRS, but you'd have to report 10% to the IRS anyway, because, I mean, seriously, this person just received magically $29 million. So if he keeps 2.9 million of it, which I still think is a pretty good deal, I don't know about you guys, maybe I'm just a little altruistic here, but $2.9 million would still have to be reported to the IRS. And Compound doesn't have any user information because it's DeFi, it's decentralized finance, so they don't actually have any of your information. At best, your wallet tops, or at least the public key of your wallet, which still doesn't ever identify anybody. Leshner told the crypto outlet that he views this as a moral dilemma for the users who received the comp tokens. Others in the cryptocurrency community disagree, citing a popular phrase, code is law, which basically implies that what the protocol did should be accepted as the rule. Mashable has reached out to Leshner for comment. So So yeah, just $90 million just went out. It's totally fine. It's a small bug, but I'm sure it's repairable. It's totally fine. Everything's going to be fine. Moving on, Grayscale adds Solana and Uniswap to their $495 million investment fund. So Grayscale investment house Grayscale has added Solana and Uniswap to the $495 million digital large cap fund in its latest quarterly rebalancing. So every quarter they rebalance this digital large cap fund, which basically means they take a bunch of different cryptocurrencies and they package them all up, and then you can either choose to only buy their GBTC, which is their Bitcoin or their Litecoin or Ethereum, etc., or you can just invest into the digital large cap fund and then hope for the big gains of all the different altcoins that happen to be packaged in there. Kind of like mutual stock, and now Solana, Uniswap make it in there. The allocations mark the first time the New York-based company has added Solana to the investment vehicle. So Solana so far has not been in any of their funds, and now they're adding them to the exclusively to the digital large cap fund, which is great. As of the end of yesterday, Solana made up 3.24% of the digital cap fund, and Uniswap made about 1%. Bitcoin dominates the fund, making 62%. Ethereum makes up 26%. Cardano, Chainlink, Litecoin, Bitcoin Cash make up the rest. The fund bought Solana and Uniswap by selling some of the other assets in the fund. Grayscale has decreased its Bitcoin allocation by about 5% since the last rebalancing. Other holdings changed by small amounts. The fund's ADA holding, only introduced last quarter, has increased from 4.26% to 5.11%, which I agree with that, as ADA does have a lot of potential. The only problem with ADA right now is that a lot of the contracts are sort of still time locked, and then once those are going, then there'll be quite a bit of volume, and they'll need quite a bit of liquidity of ADA and the tokens, et cetera, that are made on it. But I believe the large cap fund used to have XRP, but once that lawsuit came around, they just liquidated everything that was XRP. And that's why I say that once this lawsuit blows over, and I believe that'll likely end in like a sort of a settlement where they're just going to have to pay a bunch of money and then sort of maybe shift about how they do their business a little bit. But I don't think XRP is going anywhere. And once that does blow over, or there's a settlement of sorts, there's something like close to 30 exchanges that have either suspended XRP trading or delisted it entirely, as well as Grayscale that might rebuy in, knowing that it's not a security, that it is money, that it's totally fine, totally legal, no one's going to get in trouble, and then all of the exchanges will follow and such as well. And there should be a big rally at that time. Some people might sell off because this whole thing started at 30 or 20 cents of XRP, and now we're far above that. But I think overall the volume coming back in would be a good investment with XRP, but who knows when that's going to happen? It seems to be moving incredibly slowly. Moving on, El Salvador successfully mines a hot $270 of Bitcoin using energy from a volcano. Did you guys get that pun? I hope you did. El Salvador President Nayib Bukele, my perfect pronunciation. Oh, God, I love it. If you want perfect pronunciation, you come to MrSotko. Every time, 100% of the time, 64% greater than the previous time. It's real. Tweeted Friday that the first mining operations with the power gathered from the volcano had apparently produced 0.00599,179 Bitcoin, or roughly $270, confirming the sustainability of the project in not in itself a spectacular number. El Salvador became the first country in the world to recognize Bitcoin as legal tender, and invested $225 million in expanding its global cryptocurrency holdings to 550 Bitcoins as part of the deployment. So we're still testing and installing, he said, but this is the first official Bitcoin mining from the volcanode. Oh, he called it the hashtag volcanode. Oh man, I wish I would have thought of that. It's so good. He also tweeted a 25-second video on Tuesday showing government-branded Bitcoin rig container ships and personnel assembling the miners. According to the New York Times, Bitcoin uses 91 terawatt hours of electricity every year. Geothermal energy accounts for roughly a quarter of El Salvador's total domestic energy production. The video title simply reads, "First Steps," and it's now gone viral. So it's basically geothermal energy. Alejandro De La Torre, a Bitcoin miner who just relocated from China to Texas, Iceland, has been doing it since the very beginning of Bitcoin mining. El Salvador is known as the land of volcanoes, and based on government data, geothermal energy already accounts for almost 1/4 of the country's local energy production. And El Salvador's move is also good news for the bigger discussion about Bitcoin's carbon footprint. So, hey, why not? Why not use a volcano in geothermal mining? But moving on here, Ethereum's fractal from 2017 that resulted in 7,000% gains for Ethereum appears again in 2021. Bids for Ethereum's native token Ether could rise to $13,000 in the next 2 months if history repeats. So shows a fractal indicator from 2017 consisting of at least 4 technical patterns that were instrumental in pushing Ethereum price up over 7,000%. The same set of bullish indicators have flashed again in 2021 as Ether trades above 33.50 after rallying over 360% year to date. In detail, the 4 technical indicators are stochastic RSI, relative strength index, bullish hammer, and the Fibonacci retracement level. It started with bullish hammer's occurrence on Ether's monthly chart in 2017, followed by a 7,000% price rally in the next 6 months. The hammer led massive upside move, pushed Ether's monthly RSI to over 94, an extremely overbought zone. As a result, the cryptocurrency started consolidating sideways to neutralize its excessively bullish sentiments. RSI started correcting lower. In parallel, Ether's monthly stochastic RSI indicator, I can talk today, I promise, which compares its price with the price range over a given period, also started correcting lower after identifying the cryptocurrency as overbought, as reading above 80 is considered excessively bought and 20 is excessively sold. Later in November 2017, the stochastic RSI flipped bullish with its K line, which compares an asset's lowest low and the highest high to define a price range crossing the D line, which is a moving average of K. Meanwhile, the stochastic RSI reading was above 20 at the time of flip, which boosted Ether's bullish continuation hopes. Later, the Ethereum token surged by another 500%, closing above $1,200 in January 2018. It coincided with RSI forming a double top as shown in the chart zone, and the entire bottom to top took place inside the ascending channel range with its 23.6% Fibonacci retracement level serving as a support resistance level. So there are a lot of good signs that Ethereum is about to explode. However, I just want to put 2 of my own little thoughts on here. First of all, Ethereum has to get rid of those fees. They gotta go down. And I realize the miners and stuff will defend this because they're defending their lineage, they're defending their money and all the GPUs that they've bought and their livelihoods. The problem is they all need to switch to proof of stake. It's coming. It's not my decision. It's coming. Take all your ETH and put it in staking instead. That's how you're going to get by in the future. The problem right now with Ethereum fees is that, if you're moving $1,000 or $10,000 or $1 million worth of Ethereum, the fees are still somewhat negligible. Even if it's a $30 fee and you move $10,000, that's not so bad. The problem is that they're anywhere from $3 to $30 to then back to $15 to $10. EIP 1559 did very little for this. While it does burn Ethereum, and technically all of the burned Ethereum so far would make something like a number 85 market cap coin. All of the Ethereum ever burned is well over $1 billion, so it would be $1 billion plus market cap coin. If you were to count all that. And that's good. But the fees are still outrageous. Even fees at $3 is way too high, because imagine trying to go onto OpenSea or some NFT site, and let's say you want to buy a collection of $3 NFTs, and there's 10 of them, and you think that they might go up in price at some point, and these are what you want to buy, regardless of your decision of, the reasoning. You can't really do that, because it would be $30 if there were very low fees, approximately. But now it's going to be twice that. It's going to be over $60. So now you're going to have to wait a long time before you go to sell these. And remember, when you go to sell them, it's going to be another fee as well. And so there's a big problem here with the amount of profit that one could make with just a little bit of money. And that's a lot. And that's not just profit, but that's a lot of volume and liquidity in the Ethereum world for all the tokens, NFTs, this, that, and the other thing that people just can't use because it's just completely unprofitable. That's a big problem. Another reason why Ethereum went to $1,400 in January of 2018 was because Bitcoin was going downhill. It sort of was found that, hey, as soon as the futures market came out in something like December 17th, it immediately bombed the Bitcoin market because those futures were only for Bitcoin. And people started shorting and then started selling Bitcoin to meet those shorts because those shorts were essentially paper shorts. But if you were to sell a bunch of Bitcoin, if you happen to have it, and make a paper short, not only are you selling your Bitcoin and getting your money for it, but you're also essentially winning ticket on your paper shorts as well. So it absolutely dumped the market. And the Chicago Mercantile Exchange and CBOE futures came out then. And any time that something came out with those futures markets, and we're talking gold, uranium, and Bitcoin, and various others commodities that CBE and et cetera picked up, they immediately dumped the next day. So Bitcoin was no different. So imagine everyone is selling their Bitcoin, and people weren't as aware that the entire market was going to go down at that time. So instead they say, okay, well, I'm just going to sell my Bitcoin and I'm going to put it in another altcoin. And what better altcoin than Ethereum? Because you'll notice, if you look at the charts, most altcoins that were around that 2017 period all exploded in January of 2018 following the Bitcoin crash. So you can clearly tell the psychology of the people were just, okay, I'll get out of Bitcoin, I'll put my money in this altcoin, I'll put my money in XRP, and that's when XRP went over $3. That's when Ethereum went to $1,400. That's when Litecoin, I believe, was like $350, et cetera, down the line. So it may not have necessarily been these charts, or rather these charts were a direct result of people exclusively selling off Bitcoin, which really doesn't happen today. If Bitcoin starts going down, the whole market starts going down. Whereas back then, people didn't really quite understand that, and that Bitcoin went down, so they took all their money and put them in altcoins. So that would create a chart that you see here. That would create these dynamics that you see here. However, I do believe that thoroughly that Ethereum is easily the most undervalued cryptocurrency, because think of it this way. Binance Coin used to be an Ethereum token. Many different tokens used to be Ethereum tokens and are now their own blockchain, this, that, or the other thing. And still many tokens exist today that have $1 billion+ market cap. So that means you mean to tell me that you can have a developer say, I want to make a token. So Binance says, we want to make a token with these metrics. So a guy goes for about 30 minutes, maybe an hour, and then uses about $20 to $50 worth of Ethereum to make Binance Coin. And then Binance Coin becomes $1 billion token / blockchain now for about $50. So if you can do that for about $50, that's what I call undervalued. But moving on here to CoinGecko, the market's looking pretty saucy today. $48,000 Bitcoin, $3,400 Ethereum, and within the last 24 hours, not too much of a growth. Not too much of a growth today. We've seen a small dip today, but in the past 7 days is when we've been really seeing that growth. 26% for Solana, 15% for Ethereum, 12% for Bitcoin. So things are turning around a little bit for now, although there isn't the greatest news out there in terms of bullish activity. It's not bad news out there, and that's good. So we sort of have neutral news in the crypto world, and that's sort of what's feeding this small growth at the moment. And until some kind of FUD comes out, probably from China, as usual, we should see at least sideways or slow gains for now. But that's all I have for you guys. Make sure you like and subscribe to the channel. It helps me out a lot. Also, hit that subscription bell too, so you get notifications when my videos go live. But as usual, I will see you guys next time.